So hello everyone, in this video we are going to present a long-term analysis of stock prices and Bitcoin prices over a long period, therefore, which extends from 2024 to 2040. So here I am going to present to you the price of the Dow Jones. So it is a logarithmic unit. We start from 1900 until today. And you see that therefore when we represent the Dow Jones curve over a long period, we can notice that it roughly follows a regression curve. So here I present a model that I developed in blue, and this is the famous linear regression curve, and this regression curve in fact separates stock prices 50% of the time above and 50% of the time below. So it is a line that we call robust. It is the robust median line, that is to say that it is a little better than the classic logarithmic regression line, because it allows us not to take extreme values, but to take well-adjusted 50% above 50% below. So if we look at the evolution of prices over a long period, we therefore see that there are different crises. So you have, for example, the crisis of 1929, where prices lost almost 80%. Then you have the Second World War. Then we have the two oil shocks, so in 73 and 78. So it's a long period of stagflation, with significant inflation and interest rates at more than 10%. Then we have a period of growth in the 80s, and then we arrive at the period 2000, where we first have the bursting of the internet bubble, and then the subprime crisis in 2008, and more recently, closer to us, we to the COVID crisis. So you see, it doesn't represent much from a long-term point of view. But we can clearly see that we have a logarithmic progression. Finally, on a logarithmic scale, we have a linear progression, of course, with small accidents. And if we look closely, in fact, at the model in blue that I developed, which is a harmonic model, highlights cycles. So that's what we're going to see afterwards. So that will eventually allow us to do for a longer-term predictive analysis. Then the model in blue that I developed is very well correlated with reality, since in fact the correlation coefficient between the harmonic model and stock prices is approximately 98%. So as a reminder, the correlation is the ratio between the covariance of the series between the model and the stock prices, and therefore the variances of each of the series, then the structure of the stock prices. In fact, if we look closely, it therefore follows a double harmonicity, if I want to say so, with a periodicity of 3 to 4 years for the major cycle. So it would be a little closer to the courses of the condative periods, but shorter, because contif it is 54 years, whereas here we are over periods of 34 years, and in fact, therefore see that between the different periods, we go from inflationary cycle to deflationary cycle, that is to say cycles where, in fact, we are above the regression curve, and cycles where we is below, and then we have some small cycles which are more linked to economic cycles of expansion or recession, which are on average 8.6 years. So this periodicity of 8.6 years had been highlighted by several people, in particular Armstrong, and as a result we see clearly that it is a pattern which repeats itself recursively over time. So if we take the Dow Jones, we see that in fact we have this cyclicality, all 6 years of expansion recession cycle courses, and therefore with a greater itself, I would say, integrated into broader cycles of inflation and deflation. This is what we see here through the different cycles, with periods of stagflation, for example. Here or here in the 2000s there is the stagflation of the 70s or there during, the economic depression of the 30s, with the Second World War then this predictive model, so it is interesting, insofar as it allows to determine the market highs and the market lows therefore as well for the large cycles as the short cycles and therefore. I have represented to you therefore the different dates, let's say predictive, for the market highs so we can clearly see that the model is at check each time what has been priced in history since in fact we have a market in 1929 in 1938-17-1947 therefore the end of the war. Then just before the oil shock we therefore had a high of the market second shock oil 1990 is the Gulf War so we have a small recession then we have just before the 2000s so the bursting of the internet bubble. 2007 start of the subprime crisis which will become more serious in 2008 and 2015 and 2016 we are going to say it is the Asian crisis and so if we do a predictive perspective analysis we would therefore have market peaks in mid-2024, 2033 and so on so that is what is shown here through of the model. That's it so I'm going to explain to you a little bit now, how we're going to determine, these courses. Finally, I'm going to first review the different models, and then I'll explain to you how you get this software which allows you to determine the long-term projections for the different prices there. Now we are going to see the prices of Bitcoin, so here I have represented to you the same progression therefore long-term prices of the price of Bitcoin so the same on a logarithmic scale so unlike on the stock exchange it evolves exponentially since even in logarithmic representation we see that it takes a curve like that, so there I represented you therefore the carrier. That is to say the mathematical model that I used to model the price of Bitcoin so always the same with 50% of the time the values are above this orange curve and 50% of the time they are below so I will not give you the mathematical equation formulas. On the other hand in the software that you will find in description it will give you the numerical values. So for the time series, so you will have the values you just have to enter the value on the date you want so that you obtain the fundamental value. This is what I call the fundamental value in orange. Then you have the harmonic cycles. So we see that we have harmonic cycles every 4 years which are linked to the halving, so that is what I call the harmonic model. So we superimpose a curve made of harmonic function in cosine sine to the carrier, which is the orange curve, and then we can deduce what I call the empirical model. That is to say in fact we will take an average of all the cycles by dividing the value taken by the current spot at its fundamental value in orange and therefore we can take an average of the 4 cycles there and therefore determine the long-term projections therefore for 2024 and 2028 so we find this periodicity of 4 years linked to the halving. That is to say the halving is the reduction therefore of the reward ort to the miners for the mining of a block and therefore we see clearly that we have a harmonic structure with a periodicity of 4 years. And therefore the question is to know actually is what this model will match well over the period 2024-2030 and will it be sufficient to determine the ATH. So if we believe the model in fact we would have an ATH around the first half of 2025 which could touch around 500,000 and a second ATH around 2029 which could reach around 2 million. So therein the software that I am going to present to you So it is BTC Predictor. In fact, you find open the download links in the description. So in fact, you just have to enter the date. So it gives you the fundamental value. So this value there, and then you enter the value here of the spot price. It therefore deduces the standard deviation. So the standard deviation, in fact, is the average of the distributions of the distribution probabilities of the ratio V to VF. So I took all the data series since its creation in 2009, and so we look at the distribution of the times where it has been below or above the curve, and from there we can deduce a probability distribution, a standard deviation, and therefore for the value that you are going to enter, you will see the probability of downwards or upwards. Therefore also determine the cost. For example, is that there was one of contrain to the house, so that's it. So the two software are downloadable on in description for the purchase of the license, and well, you have to contact us, so I put all that in the links in description, and thank you for your attention.